Finance and accounting. An introduction. Finance and accounting are two important fields that are essential for individuals and businesses alike. They are used to manage and control money, as well as to make decisions about spending and investments. In this article, we will discuss what finance and accounting are, how they differ from each other, and why they are important. Finance is the study of money management. It deals with the acquisition, allocation, and management of resources, including money. There are several subfields of finance, including personal finance, corporate finance, and public finance. Personal finance refers to the management of an individual's money. It involves creating a budget, saving for the future, and investing in various assets. It also includes managing debt, such as credit card debt and student loans. Corporate finance, on the other hand, deals with the financial management of businesses. It involves making decisions about investments, managing cash flow, and assessing risk. Corporate finance also includes managing debt and equity financing. Public finance is the study of how governments manage their finances. It includes taxation, public debt, and government spending. Public finance also involves assessing the impact of government policies on the economy. Accounting. Accounting is the process of recording, classifying, and summarizing financial transactions. It provides information about the financial performance and position of an individual or business. Accounting is important because it helps individuals and businesses make informed decisions about their finances. There are two main types of accounting: financial accounting and managerial accounting. Financial accounting is used to create financial statements, such as balance sheets and income statements. These statements provide information about the financial performance and position of a business. Managerial accounting is used to provide information to managers within a business. It helps them make decisions about operations, production, and other areas of the business. Managerial accounting includes budgeting, forecasting, and cost accounting. The difference between finance and accounting. Although finance and accounting are related, they are not the same thing. Finance deals with the management of money, while accounting deals with the recording and reporting of financial transactions. Finance is concerned with the acquisition and allocation of resources, while accounting is concerned with the measurement and communication of financial information. Why finance and accounting are important. Finance and accounting are important because they help individuals and businesses make informed decisions about their finances. They provide information about the financial performance and position of an individual or business, which can be used to make decisions about spending, investments, and other financial activities. In addition, finance and accounting are essential for the success of businesses. Without proper financial management, businesses may fail to achieve their goals and objectives. Proper financial management can help businesses control costs, manage cash flow, and make informed decisions about investments and other financial activities. Conclusion. Finance and accounting are two important fields that are essential for individuals and businesses. They are used to manage and control money, as well as to make decisions about spending and investments. Finance is the study of money management, while accounting is the process of recording, classifying, and summarizing financial transactions. Although they are related, they are not the same thing. Finance and accounting are important because they help individuals and businesses make informed decisions about their finances.